Well, I think we've got recording, so I'll begin here. Listen, I want to welcome everybody. This is Tom Levitt, Broker Tom. Welcome to a very special edition of Investor Tips. I've had just an overwhelming number of phone calls and so many emails, it's unbelievable. It seems like an awful lot of people are getting very, very interested nowadays in investing in real estate. Multi-units, quads, maybe second homes, or maybe just a single little condominium that they'd like to buy and they'd like to rent out. So I've been getting a lot of calls and people are asking me just a whole host of things. Many of those questions come down to things like, Tom, what are the benefits of the real estate investments from a wealth standpoint? What's this business about the tax write-offs? Tell me a little bit about some of those components. What about if I decide to sell in the future? I've heard there's this tax-deferred exchange, IRS Code 1031, something like that. Also, how do I decide what to buy? Where do I buy it? What are some of the metrics that I should think about using? What about affordability? What about the loan? What about location? What about the type of tenants? What about the cost of maintaining it? It goes on and on and on. And also, what about some of my buyer protections when I get into this process? And speaking of the process, what about that? How does the offer work? What about negotiation? What about inspections and things like rent rolls and verification of all those things the landlord is saying he has, and what's the truthfulness and the veracity of that? Wow, lots and lots of questions. Well, I'll tell you what, for me to cover all of that stuff, would take a whole lot more than the next 5 minutes or so. But what I want to do is I want to hit on the big nail sticking up and kind of go through these so that most people will have a good appreciation of the things that they need to be thinking about, the quick, what I call the thumbnail sketch of what this really means. So let's talk about these so-called benefits and what they really come down to. Well, most people, I think, are pretty much aware of tax write-offs. And what does that really mean? Well, that means, you're treating this as a business, so it's a Schedule C item on your taxes. When it's a Schedule C item, you get to write off things that you wouldn't normally get to write off on your own personal income tax. Things you're going to be talking about would be depreciation, and when it comes to residential properties, you get to write off the value of the improvement over a period of 27.5 years. There are a lot of particular rules for that. And I can go into those in greater detail, one-on-one with you and get into some of those aspects. What about real estate taxes? Yes, you write off the real estate taxes. What about your operating expenses? Absolutely. What are they? Well, it could be electricity. It could be a laundry on site. It could be, utilities such as water and gas and on and on. Are those metered for you, or are they metered for the individual tenants? Your loan interest, yes. The real estate taxes, I might have already said that. Yes, indeed. What about the future? Why do we want to do this? Well, wealth appreciation, certainly. In California, we get appreciation year over year going in the long run. We're always going to see values going up, and I'll say always, always, because that has been, fact of the matter for the last 60 years. We go through small, dips and dwells, but, we get through them, and the values continue to go up. They aren't making a whole lot more land in California. They aren't making a whole lot more land in Orange County. So, you're always working with what you have at hand. So we talk about wealth appreciation, tax-deferred exchanges. This is another benefit to you. So if 10 years from now, 7 years from now, you decide to sell the property, you don't want to pay a capital gain tax, but you want to, let's say, buy a few others. You can, pull your equity out of this, go buy a few others, defer that tax. It's called a 1031 tax exchange. Lots of rules on it, the time it takes to sell, the time it takes to buy, using accommodators. We're not going to talk about accommodators in this session. How about affordability? Well, certainly affordability is key. What can you personally afford to do? Based on your own income, can you go out and buy another house and make those payments? And presume that you don't get rent for maybe 2 months. Can you still make those payments and the taxes and everything else? What if you buy a 10-unit apartment building? Now, you're not going to have 10 units vacant, but you might possibly have 1 or 2. Typically, we work on about a 2 to 3% vacancy rate. But you've got to be able to afford those things, and all of your bills, you've got to be able to afford it. The loan itself, loans are a little bit different in commercial if it's going to be 5 units or more, and that's where most people seem to be talking nowadays for their investments. The rates are a little bit higher. The appraisals are going to cost a little bit more. The inspections, certainly, it's a larger building, it's going to be a little bit more expensive. There are some other things that you have to consider, and that is your debt coverage ratio. Let me explain that very, very quickly. The lender expects the income to be about 20 to 25% more than your debt. So that would be a 1.2 to 1.25 debt coverage ratio. And in future sessions, I can go into more detail on that. And what about all the other costs associated with it? I mean, there's going to be escrow costs, there'll be title costs, and the normal things that you get anytime there's an exchange or a transfer of property. People ask me about the process. Well, you know, what we do is we start figuring out what you can afford, locate various places you're interested in. Remember, these aren't places that you necessarily want to live yourself, but you want to be able to make money. So making money is a pretty important thing. We have to decide what the capitalization rate is, and I won't go into that because we talked about that a session here not too long ago. But you know, cap rates, we want to have about 5.5, 6, 6.2 if we can get them, so that we know that it's a decent investment. But then we sit down and write the offer, and the offer is going to have negotiable points to it, price, terms, conditions. Many of those conditions are going to be very, very important. You're going to want to have an opportunity to look at rent rolls while it's in escrow, and that's knowing all the things that are there about those tenants and what their deposits are, and there'll be estoppels to make sure that, you know, the present landlord doesn't abscond with monies that belong to the property or belong to the current tenants, and there are a lot of details to that. Verification of expenses is important. Yeah, I've heard the same stories you've heard. There are some landlords that cook their books, and they've got a couple of different sets, and you want to make sure you're looking at a good set. And I got some ways to figure out whether what you get provided is good, and some rule of the thumb ratios on expenses, and we can sit down and talk about those. But more importantly, it's the buyer contingencies, the buyer protections, and this is what I do best for my clients, is when we sit down and put together an offer, it's going to be an offer that's going to be watching you, your investment, and isn't going to let you get trapped into anything that isn't going to work for you. So, you know, I'm going to make sure that there are the proper contingencies in there and the opportunities for you to pull the old ripcord, you know, when it's time to get out if it's not going to work for you. And that way you can recover your good faith deposit and so forth. So this is a fast and dusty answer to an awful lot of questions, but I think I've hit on the highlights, the big nail sticking up. More importantly, what I'd like to be able to do is find out which of these areas you'd like more detail on. You can certainly call me, and it's 714-264-5964. You can email me. That's tom@tomlevitt.com. Be glad to talk to you. Be even happier to sit down and give you a one-on-one consultation on whether this is going to work for you or not. So, whew, that's fast. Hope I got through it I know I got through it quickly, but I think I talked about all the stuff that most people wanted to hear. Okay, details to follow. Thanks, as always, take care, and Broker Tom signing out.